Hi, I'm Miranda Chook, a CPA. International Financial Reporting Standards, or IFRS, are issued by the International Accounting Standards Board, and they are a single set of accounting pronouncements that currently is in use by over 100 countries by publicly listed companies. Now, this set of financial standards is significantly less detailed than current US Gaap. It also provides a lot less industry-specific guidance that currently exists in the US. So what this really will mean is that there's going to be a lot more judgment and a lot more documentation that's required to support the accounting postures that a company will decide to take. Now, at the moment, the U.S. SEC has not fully agreed to adopt the standards. I mean, we're definitely looking at convergence in the future, but they are waiting for a few milestones to take place. And the milestones include things such as continued improvement in the international standards themselves, more funding and stability for the IASB so that there is accountability. Right now, what the SEC is looking at is they've sort of set a target date in the year 2011 for the SEC to make a determination, while they're looking all along the way, but to make a so-called final determination in that year in terms of when the U.S. should formally adopt IFRS. Right now it looks like for large accelerated filers that they will present their year 2014 financial statements in accordance to international standards, accelerated filers in 2015, and the remaining filers in 2016. Now, a couple of quick examples of current differences between US Gaap and IFRS include that for inventories. Right now, there is no provision for LIFO type inventories under IFRS, so this may have quite a large impact on many US companies. In terms of revenue recognition, again, as I mentioned earlier, there's much less industry-specific guidance. So particularly for high-tech or software companies, the concept of VSOE and the residual method and so on does not necessarily exist step for step. So there may definitely be some ramifications there. And you need to work with your auditors to determine and evaluate where the major differences are going to be between your current US Gaap and IFRS, and to determine the impacts and to work on educating your investors, your bankers, the people, your staff, the preparers as well, because as well, you know, the auditors are going through their own training on this as well.